So today we had a really good example in Twitter of using a price level from yesterday, using a breaking news event, and using the tape to make a really good high risk reward short. So if we take a look at a 2-day chart for Twitter, there becomes a very important level from yesterday that we can use today where essentially Twitter can never really trade above after a significant period of time. And if you look at the chart from yesterday at Twitter, this 2055 area was really significant. So right there, the stock doesn't get above 2055. And what happens? That's its move to the low of the day during that time period. Pops up from around 20, goes up to where? Doesn't trade above that 2055. So when I look at a chart from day one and I'm looking for levels on a day like today, the momentum to me is still to the downside as long as Twitter is below that 2055. If Twitter got above that 2055, the 2-day momentum would be to the upside. Okay? Today, out of nowhere comes a report that David Faber says CRM, Salesforce, is still in play to take out Twitter. And there are other bidders as well. And then our squawk guy says he's reiterating what he said yesterday. The stock went from 1920 to 2050 when David Faber reiterated what he said yesterday. So we get an opportunity where the stock goes up to this resistance level, this important resistance level from yesterday off of news that's not news. He said this yesterday. Okay, so I say this a lot. When something comes up to a level like that, you got to be careful about it drifting through that level. People are a little bit confused. It can shoot through that 2055 level just a little bit, right? So you can just short it just on price. If you're an aggressive trader, it pulls up to that level, you just sort of short it. You're going to have to worry. You're going to have to deal with a little bit of a spray through there potentially. If you're a more conservative trader, you can do what?
Wait for it to splash up?
Yeah, you can.
Get back in when it's coming.
Yeah, you can wait to see what happens around the level. You can wait for the tape to show you the weakness, and it did. You didn't need to get out in front of this. It didn't actually even get above that 2055 area. It went up towards it. You watch the tape as it's going up. You see how it's going up. Bids were holding, bids were holding, bids were holding. Buyers were fighting and winning every battle. And then, sure enough, at 2050, bids tried to step up. And for the first time, from 1980 all the way up to 2050, for the first time, when a bid was tested, it dropped. It couldn't hold that 2050. And then it got below that 48 cents. They knocked out a pretty nice bid. And so you have a clear signal on the tape that it's weaker. You know the news is a reiteration, so the stock price is not justified on a short-term basis. You have an important level from yesterday. Okay? You could have shorted a lot up there at 2050. I shorted 3 tiers. I can always trade this better. I certainly traded out of some of it pretty quickly. And then you have a decision also, which is you could have swung that. If you think Twitter wasn't done into the close yesterday, closed pretty weakly, you could have swung it right from there. If you are a shorter term trader, you're gonna cover that. You're gonna take some off as it's pulling into 20. So you might have a system where every 10 cents you're taking off a little bit. You're not sure exactly how close to 20 it's going to get, or if it's going to get through 20, and then below 20. And certainly into 1985, you're flat. You're flat if you're intraday trading that. Okay? It's a good example from today in trading that Twitter. I thought that was a pretty good risk reward and a pretty easy trade.